Is the stock market getting healthier? Still afraid? Still tentative? And still tepid? These are the words I used to describe the state of the stock market this past week. But where does that leave us looking into next week and the December holidays that are coming up? Let's take a look. Before we dive into the metrics, let's put things in perspective. We're looking at the S&P 500 or the ETF SPY over the past 5 days, and you can see that it was up about 1.19%. So that's not too bad for the week. But let's compare it to the Dow, the NASDAQ 100, and the small cap index Russell 2000 or IWM. This paints a little more of a complete picture. As you can see, this yellowish orange line, or the Dow Jones Industrial Average, was up the most over the past 5 days, up 1.81%. The S&P 500 was the next highest one, up 1.19%. The NASDAQ was actually down for the week, and the small caps, IWM, were just slightly up 0.48%. This is not a healthy rally coming off of a bottom. This is a tentative rally. People are putting their money into safe haven assets instead of more risky assets like the NASDAQ 100 and the small caps. Even though the small caps led out of this bottom, they seem to be faltering now, and you'll see that later. But what if we throw in Ark Innovation, ARKK? Well, you can see here that Ark Innovation is down 5.24% over the last 5 days. So it's really underperforming, and this is the highest risk basket of stocks in this graph. So let's look over the past month. How do these look then? Do they look any better? Well, the Dow Jones Industrial Average, or DJIA, is leading the pack again, up 7.9% over the past 1 month, followed by the S&P 500, followed closely by the NASDAQ and small caps, and then Ark Innovation is down almost 5% over the last month. Let's look back over the past 6 months, just to put things in perspective. So you can see that the market kind of peaked out here and then fell again. And then since this bottom, almost everything is higher, except Ark. So again, but we're being led by the Dow. Small caps that I mentioned led the way out, are second place here. So that's actually kind of a good sign. The S&P 500 is in third, and then the NASDAQ 100 is negative over the past 6 months, just slightly. But then you have Ark Innovation, which really shot up here and tried to rally and is now down 15.55% over the past 6 months. Just to really put things in perspective, let's look back 5 years. Now, this tells a story I think you want to embrace over the long term. So what do we have here? We're being led by the NASDAQ 100, up 85.72% over the past 5 years, followed by the S&P 500, up 52% over the last 5 years, followed by the Dow Jones Industrial Average, up 41, almost 42% over the last 5 years, followed by the Russell 2000. What kind of blows my mind here is you're able to buy the Ark Innovation Fund for less than it sold for 5 years ago. Now, do I think the Ark Innovation Fund is a bad fund? No, I don't. They're investing in forward-looking, very innovative companies. Those are out of favor, and they have been out of favor, obviously, since the beginning of 2021. But eventually, those companies are going to come into their own, and I think Ark will do very well. So if you're inclined, now might be a good time to buy it. What are we seeing for the dynamics of the markets overall? Now, we're using the S&P 500 here, but we're not measuring the S&P 500. We're measuring lots of different things around the S&P 500. But what you can see here is the S&P 500 has been kind of going up fairly unsteadily since back here. And we had a second bottom forming indicator back here. There was a previous one. Our first one was several weeks earlier. I'm not quite sure the time frame, but we've had 2 of them here. And then that was followed later by a bottom confirmation signal. So we had a bottom forming indicator here where the orange line, the bottom forming line, was at 100%, and the confidence level was up here at about 96 to 98%. That's a very strong bottom forming indicator. And then what happened back here at the end of October? Well, we had the bottom confirmation signal at 100%, and the confidence level, again, was up, I think, around 96 or 97% here. So that's a fairly good bottom confirmation indicator. Now, I thought we might get a second bottom confirmation here. We didn't, But I still like the fact that this blue line is up here at 100% and stayed there for quite a while. We'll have to see where this goes forward. But you can see this rally has been very jagged and tentative. And in fact, lately, it's been kind of going sideways to slightly up. What are our equity versus safety metrics telling us? Well, if you look at this, back on August 17th, and I'll keep referring to this, we had a healthy stock market, but we had an unhealthy treasury market. You can see the longer duration treasuries, TLT and EDV, were ranked 9 and 10, dead last. Then September 30th, we had a very unhealthy stock market. You can see all the equities are ranked down here at the bottom, but we still had an unhealthy treasury market because cash and T-bills, 90-day treasuries, were ranked 1 and 2, followed by gold in number 3. That's not a healthy market at all. Then last Friday, on November 18th, a week ago, we had a very healthy treasury market with long-term treasuries ranked 1 and 2, gold ranked number 3, but equities were starting to creep up here off the bottom. So this is starting to look good for equities. It's starting to look good for treasuries. Now where are we? Well, as of this past Friday, the day after Thanksgiving, you still have long-term treasuries ranked 1 and 2, but you can see stocks are moving up and gold is moving down. This is starting to look very good. What do I want to see here? I want to see equities ranked 1, 2, 3, and 4, preferably with IWM and QQQ ranked 1 and 2. And I want to see longer-term treasuries ranked somewhere around 6 or 7 and cash at the bottom, which is kind of where it is right now. So this is starting to look a little better, but it still has a ways to go. Let's take a look at the buying and selling pressure because this tells another piece of the story. All of these pieces I'm showing you are pieces of the market story that give you the entire picture and help you understand what's going on. So if we look at the buying and selling pressure for the Dow Jones Industrial Average or the ETF DIA, you can see we've had a very nice rally here, but it started to kind of go sideways and then slightly up again here at the end. But you can see that over a 2-month trend, the gray line, the solid gray line, is the buying pressure. And you can see over that 2-month trend, that gray line has been steadily moving higher. And even over the 1-month trend here, this shorter dashed line, you can see that the solid gray line, the buying pressure, has been moving up. This is great. This looks really good. And you can see the selling pressure has been declining over the same time frames. So this looks very healthy for the Dow, but is that healthy for the overall stock market? I say no, because people are putting their money in safe equities, not risky ones. Let's take a look at the S&P 500. So the S&P 500 has also been rallying. It's been faltering as of late, except for the last few days when it went up. And again, you can see that the buying pressure, the solid gray line, has been moving steadily higher over the last 2 months. This is good. You can see that the selling pressure has been declining over the last 1 and 2 months. This is good. But you can also see that the buying pressure has been collapsing here as the S&P 500 has begun to wane. That's not good. So we'll have to see how this plays out going forward. Okay, now we're getting a little more risky, the NASDAQ 100. And you can see that, it's rallied here, but it's been pretty jagged all over the place, actually. You can see it's been waning quite a bit more than the Dow or the S&P here. It's pulled back quite a bit, but then it tried to rally again. And you can see that the buying pressure has been increasing over the past 2 months and over the past 1 month, but not as steeply as the other ones. And the selling pressure has been declining. Now you can see that currently the buying pressure is above the selling pressure, but we really need to see this start going up strongly before I'll be convinced that we're in a good, strong bull market. What about small caps? Now, small caps started leading us out of this very early, before the Dow, before the S&P, before the NASDAQ, and well before Ark Innovation. And you can see they've been going up, a little bit jagged, but going up. But again, they're waning recently. And you can see that the buying pressure has been steadily increasing. But over the last month, the buying pressure has been decreasing. You can see this is on a decreasing slope here, the solid gray line. And the selling pressure over the last month has been increasing. This isn't a good look for the small cap stocks. Finally, let's look at Ark Innovation, or ARKK. Now you can see that this has not been going up in general. It's been kind of going sideways to down. And you can see that here in the buying and selling pressure. The buying pressure is basically showing flat to slightly down over 2 months. It's on a downward trend over the past month. And the selling pressure has been flat to kind of sideways and flat to kind of sideways over the last 1 month. So, and currently the selling pressure is above the buying pressure. This does not look good for ARK, but maybe this is a consolidation that we're going to go through before it finally turns and starts to head higher. I like to show these best sector rankings because they give you some sense of what's going on underneath the covers, if you will. And if we look at this, and if you look back at my previous videos, energy has been in the #1 spot for quite a while now, and it looks like it's going to stay there. And you'll notice that these don't go 1, 2, 3, 4, because there are 3 of each of these in the model, and we discount 2 of them by 1 and 2 standard deviations, but we're only looking at the top ranked one of the 3. So energy is ranked #1, financials are in 2nd place, materials have moved up into 3rd place because commodities have been going up more recently. I hope that doesn't continue. Industrials are in 4th place. The Dow Jones Industrial Average as a broad index is in 5th place, and we saw that. It's been the best performer of all of the broad indices. Aerospace and defense, which was up here last week, has moved down here, and so on. Now, I don't like the fact that cash is even in this table of best sector rankings. I'd like to see it fall off the end. And remember, I said this last week, the equity versus safety model uses a fairly short time frame, so those numbers are going to change much more quickly than they will here. This uses a longer time frame. So you'll notice when we get into treasuries that, well, let's just go to the next slide and I'll show you. So if we look at the worst sector rankings, Bitcoin innovation, no surprise there. 20-year treasuries are ranked way down here near the bottom. Now, it will take some time. You can see that from last Friday, they've moved from 62 up to 58. So they're moving in the right direction. But this model is going to respond much more slowly than equity versus safety. Equity versus safety is kind of a leader, tells you kind of where they're headed. This one tells you more about where they've been. So this comes around much more slowly. Let's take a look at treasury since we were just talking about them. So initially, 3 to 7 year intermediate treasuries were really looking great. I mean, you can see that the buying pressure went through the roof here, and they really started to move up very, very nicely. Since that time, the buying pressure has dropped, and it's now below the selling pressure, although the 1-month trend is still higher, and the 2-month trend is still higher. And you can see the price action is kind of fallen off here. It hasn't fallen, but it's kind of going sideways to slightly up. Well, what does that mean for longer-term treasuries? Well, let's take a look. So 7 to 10-year treasuries, I call those intermediate to long treasuries. You can see that the buying pressure has been a little bit better here, and the price action has been moving up a little bit more aggressively. Not great, but still moving up as opposed to the intermediate treasuries, which were moving kind of a little more sideways to slightly up. And what about the long bonds, 20-year treasury bonds, TLT? Well, you can see the price has been moving up here. This is not at all tentative. I mean, it's a little ziggy-zaggy, but it's definitely moving higher. And you can see the selling pressure is below the buying pressure, this gray line, and has been moving higher over the last 1 month and over the last 2 months. So this is starting to look much more healthy here. I don't know if this means people are going to start going at the long end because they think they're so cheap that they can actually make money on the gains next year. We'll just have to wait and see what happens. What about gold? Well, to me, gold has lost its luster. You can see that it had a very nice rally here, and then it just kind of died and it's fallen back. And you can see that in the buying and selling pressure. Buying pressure moved up aggressively here, and it's moving down just as aggressively. And you can see that the 1-month trend for the selling pressure is declining, but you can see that the shorter term trend, the selling pressure is increasing and the buying pressure is declining. This doesn't look very good. It could turn around and head higher, but gold's a tough one. Gold's a tough one to make money on. And finally, what about Bitcoin and cryptos in general? Well, we talked about the FTX problems last week, and you can see that fallout is still continuing. So the price dropped big. It kind of went a little bit sideways here, dropped again. So it's kind of on a downward trend. Selling pressure was increasing over the last month, and the buying pressure was decreasing over the last month. Now, what's happened more recently? Well, since this peak in the selling pressure. The selling pressure has actually been falling here. So that maybe that's a good sign. Maybe this will turn around, but the buying pressure has been more flatline if you look at it. It's not moving up as aggressively as this one's falling down. So the buyers still aren't dominating here, in my opinion. Where does this all leave us? I'm really looking forward to the day that I can sit here and tell you the stock and bond markets are healthy and they're looking great. We're not there yet. They continue to move in the right direction, but it looks like they're still very tentative after the devastation we've seen this past year. Oh, and by the way, the 2023 predictions about where the market's going to go next year are going to start coming out. Just ignore them. Nobody has a crystal ball. Only time will tell. The good news is the equity markets are continuing to move higher, although it's the more safe stocks like the Dow Jones Industrial Average Index that's moving higher, while the more risky ones like the NASDAQ Small Cap, Ark Invest, are all kind of languishing or moving lower. This is not a great look. Buying in treasuries appears to be moving toward longer duration, which is good and healthy for the treasury market. We'll have to see if this continues. And gold has lost its luster, at least for now. Crypto is still losing ground. The good news is that the selling pressure more recently has been declining, while the buying pressure has been moving up ever so slightly. Maybe we'll see some upward movement if there isn't any more contagion. Look, the end result is you need to be in the equity markets to take advantage of any potential upside, but you also need to have a healthy safety portion in your portfolio to protect against any unforeseen downside. I'm Calvin Rose, and thank you for watching today. If you feel you got some value out of this video, please hit the like, subscribe, and notification icon so you won't miss an upcoming episode of Invest Smarter. That's all for now.